Hi everyone, welcome to Stock Smarts, your trusted source for smarter investing and financial education. Today we're diving into an important and maybe even controversial topic. Why the PSEi is unlikely to hit 20,000 points in the next 5 years. Yes, you heard that right. Even though many investors are hopeful and even though the market has had its moments of brilliance, there are several strong reasons why expecting a 20,000 PSEi within 5 years might be unrealistic. Let's break it down. First, let's look at history. The PSEi reached around 9,000 points for the first time in early 2018. Today, several years later, the index has still not surpassed that previous high in any sustainable way. If it took the market so many years just to hover below 10,000 points, expecting it to double to 20,000 in 5 years would require extraordinary economic growth, which we haven't consistently seen yet. Second, let's talk about economic fundamentals. While the Philippines has strong consumer spending and remittance inflows, it still faces structural challenges. Limited industrialization, heavy reliance on consumer-driven GDP, low foreign direct investment compared to neighboring countries, infrastructure delays, and political uncertainties every election cycle. Without major economic reforms and a big boost in productivity, expecting a doubling of the stock index may simply not be supported by fundamentals. Third, corporate earnings matter. Stock prices in the long run follow corporate profits. To justify a 20,000 point PSEi, the earnings of the top 30 companies would have to double or close to it in 5 years. Currently, many companies are facing margin pressures, high inflation, increased borrowing costs, and lower disposable incomes from consumers. While some sectors may still grow, we are not seeing broad-based earnings acceleration at a pace needed to justify a massive rally. Fourth, interest rates are higher. In a high interest rate environment, investors demand more from equities. Higher rates make bonds and other fixed income investments more attractive relative to stocks. This leads to money moving away from the stock market and into safer assets. As long as global interest rates stay elevated, it's going to be harder for stock markets, not just in the Philippines, but globally, to rise aggressively. Fifth, competition from other markets. Emerging markets like Vietnam, India, and Indonesia are becoming more attractive to foreign investors. Their economies are growing faster, reforms are deeper, and valuations are competitive. If global funds are allocating money to Asia, they may choose these faster-growing economies over the Philippines. Less foreign inflow into the PSEi means less buying pressure, pushing prices higher. Now, before we continue, if you want to know more about investing in the stock market, check out the links down below for our books and online on-demand seminars. We created these to help you navigate the market with better strategies and more confidence. Yarn Busamba. All right, moving forward. 6, sentiment matters. Markets are driven by both fundamentals and emotions. The PSEi needs not just earnings growth but also strong positive sentiment to rally to 20,000. At the moment, sentiment is cautious. Investors have been burned by years of underperformance compared to other regional markets. Confidence needs to be rebuilt first before we can see massive inflows. 7, valuations are a hurdle. Right now, even at lower index levels, valuations are not as cheap as during past bear markets. If you want a market to double, you either need massive earnings growth or a massive expansion of valuation multiples like price-to-earnings ratios. Neither seems very likely without a major economic shift. 8. Currency risk. The Philippine peso has been under pressure in recent years due to global economic uncertainties. A weaker peso can deter foreign investors who prefer markets where currency risk is low. Without strong foreign investor demand, the PSEi's rise will likely be muted. Ninth, limited new blood. Unlike in other markets where massive IPOs inject excitement, the Philippine market has had very few blockbuster IPOs that really captured investor enthusiasm. Without fresh, exciting new companies listed, the index remains dominated by traditional conglomerates and banks. Steady, but not fast-growing. 10th, global headwinds. We are living in a world of higher geopolitical risks, supply chain challenges, and inflation concerns. Global recessions, wars, or major disruptions will always affect emerging markets harder than developed ones. The Philippines is not immune. Any major shock could derail growth further and depress stock prices for longer periods. So, what does all of this mean for you? Should you give up on investing? Absolutely not. It just means you have to adjust your expectations. Instead of banking on the PSEi to rocket to 20,000, focus on consistent investing. Look for strong dividend-paying companies. Focus on building passive income streams. And diversify not just within the PSEi, but also by considering global investments if possible. Remember, wealth is built slowly over time, not by betting everything on one massive market rally. If the index reaches 20,000 in 5 years, great. But if it doesn't, you'll still be winning. Because you invested consistently, picked strong companies, reinvested your dividends, and played the long game. To summarize everything we've discussed today, historical performance suggests slow growth. Economic fundamentals need major improvements. Earnings growth is not fast enough yet. Higher interest rates are a headwind. Other markets are more attractive to foreigners. Investor sentiment remains cautious. Valuations are not extremely cheap. Currency risks are real. Lack of blockbuster IPOs. Global uncertainties are increasing. But despite all of these challenges, smart, patient investors can still build wealth. Focus on what you can control: your savings rate, your investment choices, and your mindset. Thank you so much for joining us today here at Stock Smarts. If you found this video helpful, please like, comment, and subscribe. Stay tuned for more insights to help you grow your wealth wisely. See you in the next video.